Warren, it's good to have you back with us. Your firm is noteworthy for things like having very little debt. Unlike 30 to 1 we saw on Wall Street, you were 2 to 1.
Right.
You focus on being what, as you put it, a middleman and recognizing that's what you are,
Right.
and not all the other things Wall Street thought it would be. Briefly describe what Stephenss is doing these days, the key areas that you're focusing on.
Well, thanks, Steve. It's great to be back with you always. We are continuing to focus on small and middle market companies that are in the U.S. We're seeing
That's $25 million to $1 billion in sales?
more or less. Everybody has a different definition of that. I mean, some people take market caps up to $2 billion. For small cap, as incredible as that seems to you and me today, that would have been a huge company not too long ago. But it's, you know, that's our focus on small and mid-cap companies. We're continuing to find really good people who want to come to work for a very stable platform. And as you mentioned, we've achieved a reputation of being very stable in the industry. So we're seeing great people. We've hired a lot of people over the last probably 4 years. We've hired close to 100 investment banking people. And
so you're not doing layoffs like Wall Street is?
We're not doing layoffs. Since we're privately owned, we're not giving our bonuses in stock and restricting that. Quite the contrary. We see a lot of open field in front of us, and again, the talent pool is really good.
So how would you break it down? Underwriting, what there is out there?
Underwriting is probably the smallest part of our business. We are making a concerted effort to improve that part of our business. Our business has mainly been M&A and private capital raising. Of course, one of our themes, my themes, has been we've over the last 10 or 15 years done an enormous amount of damage to the ability of firms to raise capital in the public markets. And
I want to touch that in a minute. So private equity funding and then managing money.
Yes, yeah, we have very significant money management operations that again are focused mainly on small and mid-cap companies, kind of keeping with the theme of the firm. But that and our private client group continues to grow again as people are looking for a stable platform. And frankly, it doesn't hurt that we're private with our clients. I think they like that.
Talking about the private clients for a moment, how do you deal with probably the biggest challenge, which is emotions?
It's really hard. One of the things I think we've done with our regulations over the years is we've increased the volatility in the market a lot. Market moves of 2% or greater now are about double the number that they were prior to things like decimalization and best execution. And it's difficult to make your clients understand that there are certain days that the market will go up or down 2%, and it's basically driven by algorithms talking to algorithms, and there's no real rhyme or reason for that. So it's difficult. We just try to preach long-term investing and stay in the course.
How would you define, obviously each client is different, but how would you define your basic investment strategy? Is it buy and hold? And
it is buy and hold. Find good companies, have a good balanced portfolio, but owning equities is an essential part of anyone's portfolio. You just can't ignore it over time. It's gonna add the real pop to anyone's overall performance. So owning good companies with good balance sheets, preferably in industries that are growing, but sometimes you can find one in an industry that's not growing that company's just an outstanding performer, and you ought to own it. But it is definitely a buy and hold strategy.
What companies and sectors do you like at the moment? You've been liking, I know, natural gas for a long time.
Yeah, that hadn't proved out too well with prices about $2.40 per MCF. But we still like natural gas, and we still like the energy business a lot. I think over time, we will come to realize the true wealth that the asset natural gas is for this country and what it can mean to us.
Do you think the 240 is a reflection of the fact that infrastructure and possibilities haven't caught up with the sudden increase in production?
I would say that's right.
It's just an aberration until the rest of it catches up?
I would think so. I hope we will see more vehicles begin to convert to run on natural gas. Certainly we ought to be using it to generate more electricity. And I think over time we'll see that. But right now we just have more supply than we have need for it in the current constraints of our energy complex.
And do you feel if some of the uncertainty about the supply of natural gas, we all know what fracking can do, but some in the government seem intent on strangling it. Do you think if people know the supply is going to be there, they'll start making the capital investments to use natural gas?
I think so. I think you will see. Of course, we have one of the industries we follow very closely is the trucking industry. They would love if today there was an option for them to run their fleets on natural gas because of the price disparity between oil and diesel, refined diesel, which they almost exclusively run on now, and natural gas. It isn't there. There's a lot to be done for that to happen, but I think that's going to happen. Now, the price disparity will close over time, but having that reliable U.S. North American-based energy supply, I think will go a long way towards giving people the confidence to build out the infrastructure with or without any government incentives. I think the economics are going to dictate that. Plus, it's cleaner. I mean, it is a green fossil fuel, so to speak.
You're not going to have to worry about regs about what you're doing to the environment.
Not now, but I'm sure there'll be someone who tries to do that.
What other areas? I remember when we talked before, you liked property and casualty business.
We have a significant insurance agency and are doing quite a lot in property casualty business, but that's as a brokerage. Insurance brokerage arm of our business. We don't really follow the insurance business per se. The financial services industry seems to have a lot of upside, but again, the regulations are so unclear and muddied that for most of our clients today, we don't see any real rush to own the banks or affiliated type, similar types of financial services companies.
Other areas that attract you?
Well,
I'm going to touch on, is newspapers.
Yeah,
we'll get to that in a moment.
You'll get to that, yeah. Certainly, we've never really been a big sector firm in terms of our research. We really try to identify particular companies, and we publish every year, at the beginning of every year, our best ideas for the year. And I think and they cover all different types of industries. If you look at that list over the last few years, it has been an extraordinary performer, but it's not really something you could go focus on one industry.
Any particular companies stand out right now? Of course, you're famous for Wal-Mart, but...
Right. Well, I'm really not the right person to ask about that. I think you'd almost have to go to our best idea list and look. But I know, because I believe in that list, they're up about 15% this year on that best idea list. So it's
Is that on your website?
It's on our website. Yeah, our best ideas are on our website, and we track it like it's a real money management product, although it's not. We try to keep the accurate records for it.
Now, newspapers. I remember when we chatted, you were in newspapers already. Now
Yep.
you just bought a slug from the New York Times.
We did.
Small newspapers.
Right.
You a glutton for punishment, or?
Well, I think, as I've said before, I'm not one of those that thinks newspapers are going to go away, and I don't think the news gathering aspect of magazines or newspapers are going to go away. I think at some point in time there's going to be a realization that the professionalism of the reporters, the editors, the people that manage, that determine what's going to make it into a publication and what's not going to make it into a publication is actually worth something. In newspapers, particular case, I just don't think there's any way you're ever going to get local news, sports, politics from any other source but your local newspaper. And the purchase of the New York Times group, most of those papers are pretty small newspapers by most standards, and so we're very optimistic that we can improve their operations, but that in the long run those are going to be great long-term assets for us.
So in essence, what you're buying is the ability to create content.
We are, and I think content is particularly professional content is going to be really important. We have a joke around the office about people that are always in their pajamas blogging. Well, that's not really news. That's not really professional reporting, and I don't really care to read that unless I was doing a survey of people's public opinions, which can be done professionally without that. I'm interested in reading someone that's thoughtful and a professional journalist that's had an editor question what their sources are and improve their writing and get the story as tight as it can be. So I'm very optimistic in the long run that papers will be diminished. There's no doubt in terms of their influence. You won't get national news out of your local newspaper. It doesn't mean you won't at least look at it, but you won't get politics, sports, local government, even state government issues covered where you can easily find it, I think, except in your local paper.
One other quick question on that. How do you treat with the web? People go on the web, they expect it to be free.
Well, I think the newspaper industry in general, and we followed along that trend as we gave our content away for free. We're in the process of undoing that wherever we can. We're going to put the newspapers behind a paywall. If you're a subscriber to the newspaper, you obviously don't have to pay to get access on the internet. If you're not a subscriber to the print version, you can pay for an internet subscription, which of course will be cheaper than a print subscription. But we are trying to reverse that course, and where we've been able to do so, we've had a pretty good result.